I think, as you mentioned, we had some troubling revisions. We've lost, I think, 69,000 jobs over the last couple of months compared to the prior prints. We were slightly above expectations, but part of that is that expectations were somewhat muted. Mm-hmm. I think that we are still in a wait-and-see posture on how the chaotic trade policies of the Trump administration and other things are going to impact the labor market. You know, we've already seen consumer sentiment tank, some troubling signs in investment and manufacturing, but some of those knock-on effects in the labor market are going to take time to show up as businesses hold back on investment, trying to figure out what's going to be happening, and as some of the tariffs that are already in place work their way through the economy.
So cut rates by a full percentage point. Emergency cut, Donald Trump says. I'm assuming that you're not prescribing that. You can let us know. Chris Sununu was on with us earlier and said you're going to need to hold that cut for the second half of the year when there is real weakness. Is he right?
I think that the Fed is in a really difficult position because one of the things that you worry about is labor market effects, as we were just talking about, tend to come at a lag from other economic effects. And so you worry about getting behind the curve. That's a phrase you hear a lot with the Fed, that if you don't act until you start to see dramatic softening in the labor market, that softening can happen very quickly and then become a self-fulfilling cycle. That said, I think the Fed is also worried about inflation and worried about what the tariffs and other economic policies that the Trump administration is pursuing are going to do to the price level and to investment. You know, I have often said that I thought that the Fed should have cut faster and more aggressively and probably not gone as high as they did to keep a strong labor market and also provide some cost relief to families on things like mortgages and allow for additional investment in the housing sector, which is very, very rate dependent and really important. But I do think that the Fed's in a difficult position here. And I don't think that the Fed should be making policy based on Donald Trump's Truth Social posts. That is a very dangerous world.
Well, the Fed has made it very clear, and the chairman has said many times, that they do not, in fact, intend to do that they are following the data here. When we consider the labor market data specifically, though, to the point you were just making around businesses making investment decisions, that also includes hiring, deciding whether or not now is a time you want to get bigger, but there is a difference between deciding not to get bigger and deciding actively to get smaller and shrink your labor force. How close are we, Kitty, to the kind of pivot point in that where we go from having a hiring conversation to a firing one?
I think it's hard to say. We have seen some troubling info about layoffs going up. We're seeing less of the kind of dynamism of people leaving jobs to take better jobs and that kind of turnover. That is worrisome. You know, I think the labor market so far has been pretty resilient, but as you said, as plants decide whether they're going to be able to scale up operations or scale down operations, we're going to start seeing those decisions affect workers more than they already are.
We saw, indeed, some pretty significant cuts in terms of government workers and an expectation for more. Is this the Doge at work, or is there more to it? We have a hiring freeze and an element of attrition that Anna Wong was talking about. So I'm trying to figure out, is this the residue of Doge cuts or not?
So I do think that it is largely about Doge, and this is another really frightening tailwind on the economy because it's not actually the residue, right? A lot of the government workers that have been cut by Doge, the announced cuts have not gone into effect yet, and people have not been initially laid off yet. And so those cuts are not showing up in this data yet, but we anticipate tens or even hundreds of thousands of federal workers continuing to lose their jobs over the next months, you know, approaching the new fiscal year.
Where's the unemployment rate in that world?
That's a really good question. And we did see in this jobs report the labor force participation rate tick down slightly. That's not necessarily a huge cause for concern, although there's plenty of room for growth in our labor force participation rate and growth in our economy. But one thing to bear in mind is that makes the denominator on that unemployment rate different. And so when the labor force falls, you can see a kind of artificial propping up of, a lower unemployment rate. And so it's something to keep an eye on. And if those federal workers struggle to find jobs amidst the, using their very specialized skills and also those workers provide really important services for their local communities and for the economy. And so we haven't yet seen those effects really impact the economy to the extent that they probably will. But that is really worrisome.
So that's something that could hit later. But Republicans also argue, Kitty, that also hitting later is the impact of the One Big Beautiful Bill. When the tax cuts are actually extended, people won't face a tax hike, they say. There will be some stimulus in the economy from things like no tax on tips or on overtime. How should we realistically be thinking about those effects, knowing that an extension isn't a deeper cut than what people have been currently experiencing?
That's right. And also, I would point out that a big part of what One Big Beautiful Bill is going to do is take away health care from millions of Americans. The House-passed draft is going to have really serious repercussions. And, one of the things that we saw in the jobs report today was continued strong growth in the healthcare sector for jobs. We can kiss that goodbye if we kick millions of people off of their health insurance. But more importantly, workers and families need stable health care in order to do their jobs. And this is going to have a real drag on the economy. Some analysts have said that several 100,000 jobs could be lost in local economies because of these Medicaid cuts alone. And that is not made up for by no tax on tips. About 2% of workers earn tips, and they will be getting pennies on the dollar, while the vast majority of the tax cuts in the bill go to the very wealthiest among us. And I think, that's one of the reasons that this bill is incredibly unpopular. The American people understand that shoveling another $70,000 a pop to the top 1% is not going to help them afford a house, have their kids in school, have a good job.
We've got about a minute left. Kitty, when do you start to get worried about the debt ceiling? We're talking about it in the abstract right now. We're dancing around an X date. There's a chance this bill won't be done in time, and there might have to be a standalone measure to handle it. The markets will freak out when that happens, presumably, on the concern that we could, in fact, default. How about you?
I strongly hope that we do not see the kind of brinkmanship that we have seen in the past. We should not be in a situation where anyone is holding, our nation's credit
you give them
hostage.
the 4th of July before you get worried?
I hope that there will be some way to deal with the debt ceiling that does not encourage folks in Congress to vote for massive cuts to Medicaid.